Thank you for joining us. I'm Juan, lead trader and founder of ProsperiTrade. In this video, we're going to talk about ticker symbol SMTI. And we did our due diligence. I printed out their annual report. Here it is, over 100 pages. Went over it twice, looked into their financials, called someone from investor relations, and I have an appointment to speak to someone on the 17th. So we're going to ask some more questions then. And this ticker came across my radar from a YouTube video that I saw where Neil Cataldi was being interviewed, and he described this company as an iceberg company, where you have the iceberg, and if on the top it doesn't look like much, but when you dig deeper, you find that there's a whole bunch of ice and there's a whole lot more substance than just what's apparent.
Yeah, thanks, Andrew. I'll start off. A well-respected investor I know recently used the term iceberg stock to describe Sonera. And I thought that was pretty interesting. On the surface, there doesn't really appear to be very much yet, but underneath, all of the pieces are coming together.
So the company is called Sonera MedTech. They don't actually make anything. They have licensing agreements and they distribute products, or they try to sell products. They go from hospitals to LTACs to nursing homes, and they sell their products. So this company basically was founded by Ron Nixon, and Ron Nixon used to be the founder of Catalyst Group, which was a private equity group. They were extremely successful, and they've had businesses like HLC Group, which he purchased around at the time when he was on the board of that group. They were making about 10 million in annual revenue, and they've grown it to over 2 billion. So he has a history of success, and the Catalyst Group invested in a company called Rochelle Industries, and Rochelle Industries also has a history of success. It was at this time that Ron found that there was a need in the market for wound care products, and that's what this company specializes in wound care products. So in 2019, Ron Nixon purchased a company known as Wound Management Technologies. He renamed the company to Sonera MedTech, which is what we have today, and today it's publicly traded. They've had some ups and downs in the market. I think they've gotten as high as $40+ a share, and now trading in their 20s. And that's kind of like a quick story of the founder, or how Sonera started. So what this company does is they get licensing agreements to sell certain products. Sonera had a pre-existing sub-licensing agreement with a company called CGI Accelerate RX, which is a subsidiary of a company called Applied Nutritionals, to distribute a product known as Accelerate RX and Hycol. Accelerate RX is their main product and basically their breadwinner for them. So Ron took control of Sonera. Sonera had already had a couple key players in there. They had Zach Fleming and Sean Bowman. They're now the co-COOs of Sonera, and they've worked at HealthPoint, and we'll show a little graph of kind of some of the management team. They have this on their presentation slides. We'll kind of go over just to show that their whole management team has a lot of experience in this field. So Sonera MedTech at this time, they're located in Texas, Fort Worth, have about 43 employees. And I checked kind of Glassdoors. I don't see like negative comments. Seems like a good work environment. So looking at their annual report, basically here, they're a medical technology company on developing and commercializing transformative technologies to improve outcomes and reduce healthcare expenditures in the chronic and surgical wound and skin care market. This is their main thing. This is where they feel they can be disruptive. Everything they do is around wound and skin care, surgical wound and skin care. So they're able to sell their products in hospitals, LTACs, nursing facilities, especially like for the elderly people that get ulcers. So they have a large market scale. And here's one study that was really interesting. where they found approximately 8.2 million patients suffer from surgical and chronic wounds each year in the United States. So it's a big market for them. So they found that this business, this wound business, is about $28 billion of estimated annual cost in surgical site infections, ranging from 3.5 to $10 billion. So it's a big market that is estimated to grow from 5 billion to 45 billion in 2027. So that's why I think this company is positioning themselves to be major players in the wound game, and they're really much insurance friendly. So they're doing things that are keeping hospital stays to a minimum, or lessening some of the hospital stays, preventing infections. So it's a plus for insurance. They're really insurance friendly, and they've expanded from not only having these products but also starting a virtual consult service through UWSS, where they can charge now and make money for consultation, wound and skincare consultations. So just to kind of briefly look at their products, this is Celerate RX, which we spoke about earlier. Their main product, it's a surgical powder. It's hydrolyzed collagen, and it provides a moist environment for surgical sites and wounds, and it basically helps with the healing. It's there. They've had successful studies and great statistics on how it's prevent, when used with certain surgeries, that it's shown success in not having in patients having less probability of having infection afterwards. And some of their other products here, the Biocos wound cleaner, wound irrigation, and just a whole bunch of products around wound care. So they also have more wound care products in the pipeline. So those are potential catalysts, especially coming along in 2023. They have some more products coming through. These are some of their services that they want to be able to just kind of take over the market with: debridement, biofilm removal, advanced biologics. So all important stuff in the wound healthcare business. And these are some of the numbers that we talked about, like the opportunity, the market cap. Right now, they just have a small portion of the market cap, not even a billion. So there's a lot of potential for upside. We talked about the management team and kind of like the experience that this team has. A lot of them come from HealthPoint, LHC, which was extremely successful, Catalyst, which we talked about, they were extremely successful, Rochelle. So they have, I really believe they have a superstar team, a management team, a board of directors. Ron Nixon is heavily invested in the company. So they are set up to succeed, and they're invested in the company. And of course, they're going to want to succeed. It's always great when you have the founder heavily invested in a company, still they're working day to day, and still a major part in the company. That's always a big plus. So again, if you go on their investor relation presentation, and this is a little bit tricky to find, it's actually in their 8K, and they have the presentation under there. They talk about major statistics. Surgical wounds are the largest Medicare spend area in wound area, totaling 11.7 billion. So they really want to kind of take over this market. So I think that's kind of where you're seeing, okay, these guys are really trying to be disruptive. Here they, wound care, disruptive strategies. They want to transition to value-based purchasing, innovative new products and services, evidence-based healing protocols, which they do have studies that have shown positive outcomes when their products are used, as far as healing and no further infections, consistent plan of care through continuum. So they want to do their telemedicine, virtual consult technology. So they want to have the products, then they want to have the consultation, kind of just take over every aspect of wound care. So this is kind of a breakdown. The research and development is done by Applied Nutritional, Rochelle, and Cook Biotech. Then they have licensing and distribution agreements with these companies, and they have to pay certain royalty fees. The exact numbers of that are in the 10Ks. Usually it's 10 to 4% royalty fee. Usually there's a maximum per year of how much they're going to pay, whether it's a million or 500 or whatever. And they have independent contractors and different people that they're licensed to sell in the hospitals. They have to do training and sell these products. So that's kind of like how the setup that they have. So as far as technical analysis, which really isn't too important if you truly believe in this company, but we'll just kind of go over it. They've been beat up quite a bit since they're high here. Right now they're trading below the RSI, low RSI. So it seems like right now is a good opportunity to buy. It seems like they're going to kind of like bounce off some of this support. So that's the potential, but just know that they do have earnings coming up. I think they're going to have positive earnings. Last year they kind of got beat up a little bit by COVID, but they had a good fourth quarter. So I do believe that they will show a positive earnings, but that's speculation, and that's really at your own risk if you want to wait till after earnings to get in if you believe in this company. So again, here's kind of like a setup, a presentation of their products. For the surgical science side, they have the Celerate RX, and these products coming up. And wound care, they have these products here. And their UWSS, where they want to do precision healing, consultation, and they partner up with a lot of people. So a lot of things, even like the consultation and the like electrical, electronic kind of technology, electronic software technology that they're using. They're partnering up with different groups. So it's a lot of partnering. It's a lot of putting themselves in the right position. You can tell that the management really knows what they're doing. Uh, these are where their product can be found. So obviously in the surgical, it'll be in the acute settings or wherever type of surgery, and that's why they lost some money during COVID because a lot of simple surgeries weren't done. And they don't give these products to every single person that has a surgery. Usually, people that have other comorbidities or just high risk of infection, like smokers, diabetics, obesity. So all these things that are increasing, that's where you'll find their products used in after surgery. Wound care can be found anywhere, whether it's hospice, homes, clinics, and their services that they're going to have, virtual consults, EMR, uh, are going to be able to be found in a lot of places also. So again, UWSS, that's their services that they plan to offer, where it's the consultation, software platform for both wound and skin condition. They'll be able to share a lot of information. They'll be able to use that information to only improve their products. So they're going to be able to gather a lot of info with that, and also have another stream of revenue. So again, we talked about they have 41 employees. They're incorporated in Texas, December 14th, 2001, and they entered into a share agreement with CGI Accelerate RX, which we said was an affiliate of Catalyst. Catalyst had 50% of this, and they purchased that for the exchange of over 1 million shares. And that's kind of like their setup, how they're set up. So, obviously, we can't really do like Gordon growth models or different DSFs, DCFs, because they don't have no free cash flow. But what I did do is create an Excel sheet based off of the potential business that they're going to get. So they've right now what they got last year in revenue was just based off a couple hundred hospitals. So their revenue did increase quite a lot, from 11 million in December 2019 to 15 million, which is almost a $6 million increase. But at the same time, their selling, general, and admin expenses also increased quite more. So they ended up losing money again for the year. Now, in their annual report, they said that it made such a big jump, such a big increase, because they've expanded their sales force, and that over the next few years, it should be lower. So this, if you just take their numbers and these numbers here, and this is based off of a couple hundred hospitals that they're selling to, that they have contracts with, and I have here my bearish case. There's the potential of negative 64% downside. So we would say the intrinsic value based off of those numbers are, the companies should be trading at $9. That's where the risk is. So you risk losing 64% of whatever if they don't grow anything, if they just keep the same accounts and they continue losing money over the next few years, then the downside is $9 a risk. So other risks that they have, obviously, they have partnership with all these companies, and that if if they lose their partnership, then they lose a lot of their revenue. So revenue growth for a particular product is difficult to predict. If one of their products loses FDA approval clearance, that's a big risk. If they, some major lawsuits, that's a big risk. Relying on R&D partners to design, manufacture, and supply these products, having licensing for marketing, that's a big risk. Celerate RX Surgical no longer has patent protection. I think in 2022 or 23, I think they're going to lose their patent protection. They're saying that they keep the ingredients for it a trade secret, but that's also a risk. They risk someone can kind of mimic what they do. So there are some major risks, some major things to be kind of worried about. It's under the radar type of stock. I went on tip ranks. I didn't see any analysts speaking on it. The ownership. The only top institutional holders are Vanguard, and very small portion, very small position. Uh, Other than that, it's mostly owned by insider ownership. So this is the risk. Okay, so now my base case is, the business that they've acquired right now. If they're successful with that, and if they are able to sell to those extra hospitals along, the same way that they sold to the current hospitals they have a business with, its potential 23% upside. So $32 right now, it's trading at 25. So this will be even a little bit higher. So that's the base. They just, if they don't grow much more than what they've grown to right now. Now my bullish case, if they're successful with all their endeavors, if they're success, if they continue to grow at the pace that they've grown, like they've expanded, there's thousands of hospitals, thousands of LTAC centers. If they continue to gather or gain more accounts and keep growing, and their services that they're going to have with UWSS consulting, I would say that the upside is somewhere up in the 167%. And of course, this is a 10-year forecast. So, we're going a little bit ways out here, out to, I'm sorry, a 5-year forecast, 2025. So potential growth 2000 up to 2000, 5 years, 2026, potential 167% upside if they continue to grow. So it's very high risk and high reward. I would say, if you're going to take a position, take a small position, monitor it. If any of those risk factors happen, that we mentioned, if they lose any licensing distribution agreements, they're going to crash. If they lose FDA approval, they're going to crash. So there's a lot of things that can go wrong, but I really do think with the experience of this team, I don't see them kind of failing. They have a great team in place, and I think that they're going to do well over the next few years, and I think they're going to continue to grow, and I think they're going to be disruptive in the field of wound and surgical care. So, I would say bullish, but be very cautious of those risk factors, and cut your losses if any of those risk factors happen. If any of those things that we mentioned before. So if you joined this long, thank you for joining us. There are more videos to watch. Please hit the like, subscribe, and comment. And thank you for joining us.